Good afternoon, all. Ira Epstein of Linn Associates with your agriculture update, and this is for Tuesday, the 11th of June, 2019. The event of the day was in the corn market, actually, where the market took off 12 cents. And the reason is, for the first time that I recall, it may not have happened before, in the June supply-demand report, the USDA has decided to lower the yields rather substantially. Now, there's two ways to look at it. Some pre-estimates were 176 bushels an acre, others were just over 172, but they went to 166. Then, from what I'm gathering, and it's a little cloudy, they're talking, I think, about 3 million acres lost that aren't going to get planted, but we think it's a much bigger number, actually. The interesting part is, with all that bullish information, while the market's up 12 cents, it didn't run dramatically. 12 cents is a bigger than normal corn move, but not a dramatic move in the corn market. So that's something we have to consider. We are getting in the in the financial markets something, and we've got an hour left here because it's only 2 o'clock, something of an attempt at a Tuesday reversal back to the downside. Metal markets are just at best stable at this hour. Energy prices are going to wait for the rest of the day, I think, to see the API numbers that come out at 3:30 p.m. Central Daylight Time. So when we look at the weekly area chart of closes, you can see how the market came down, it's rallied, and even with all this news, what we have here is a market that when you look at the supply-demand, you just wonder how many acres are beans going to get from corn that doesn't get planted. I just looked at the 10-day forecast, and I'm seeing still in key growing areas, rain forecast over that time frame. So the market knows it, but the question is how much is it built in of that? So as we look at the market, we see where we're at right here. We still have this gap that was filled. The question I have is this market going to try to fill this gap getting closer to the 830 level, and we're sitting at 859 right now. In terms of the swing line, you have a pattern of a higher high, lower low, you get a bounce in the market. That's all that you can say. You get a bounce in the market, not much more than that. The market went to the 18-day average of closes. It's held it now for 2 days, so I'm going to call the market neutral. The swing line's got a higher high and lower low. The bias is up. We see that the old resistance was the Bollinger top, which you initially sliced through, then it acted as better resistance. Now you've got bigger resistance at the combination of the Bollinger Band and 100-day average, and when you look at momentum, it's still pointing down. Now, what could turn this market to the bear side is taking out 846 and a quarter, and if that happened, you could end up with lower highs, lower lows under the 18-day average of closes. In the soy meal market, you've gone from a market now that's come all the way down here into the 118-day average of closes and held. Should this market get under this low right here of 308.80, what happens is you could then turn lower highs, lower lows under the 18-day average. So if you're a bull, you have your job to defend here. You have your job to not let the market get under in the beans there. And in soy oil, it'll just take a move now under 27.16, and if that occurs, you've got lower highs, lower lows, putting into charge here the 26, let's call it 85 level, and the bias is down. So while the swing line's up, the bias is down and momentum is pointing down. All in all, the bean complex to me is very much on the defensive again. In the corn market, this is where I said the action was, and what the market was able to do is, if you'll recall, we had lost the embedded reading right through here. This is when you lost it. And there you go with the market prices on both numbers under 80. And they had been over 80, as you can see, a numerous amount of times in a row. When you lose them after that, you have 1 day to get them back. If you don't get them back, what happens is the market often makes a run to the 18-day average of closes. And yesterday you were up 5 3/4 on the day. And today, watch, day after you were up, now you start coming down and you hit that 18-day average. Does it always have to do that? Absolutely not. But that's textbook, what I call it. So now we have a big outside day up. The market's in a resistance area above it. You've certainly got distribution of price there. If you take out today's lows, you throw away this bullish momentum. So you can't afford to do that, in my opinion, Wednesday or Thursday. As long as it holds in that area, fine. Now the question is, can it chew through this resistance area or not? In the wheat market, higher lows, higher highs. Again, here was a market that also had the embedded reading, and it missed it. So that's why I'm saying you don't always hit it. You made a run for it, but you did not get it, and I consider that a country mile that you didn't get it. Market came back down. This was much closer. You got to 493 and a quarter from 490 and a quarter, but at the end of the day, it didn't hit it at this point. Now, if you were to take out this low here, you would obviously hit that number. But the question is, do we first go up to the upper Bollinger Band? In the sugar market, we have a pattern of higher lows, higher highs. Resistance, the 100-day average, and the upper Bollinger Band. You don't want to see today's lows taken out of 1258. If that occurred because it's an outside day up, it would give me a better indication that prices want to retrace to the 18-day average. Without that occurring, I look for the resistance maybe to be attacked at the upper Bollinger Band and the 100-day average of closes. In the coffee, here's another case where you have the embedded reading. You lose it right on this day. You can see the market first goes to the 100-day average on the same day that occurs. That's the confusing time sometimes because my rule is it's the closest of main moving averages. Market hangs there, and if it starts down again, then you could put into play, you don't have to, the 18-day, and that's just what happened today. So any way I go about it, the market's got the swing line down, the bias up, the market's got momentum down. It's a market that is trying to figure out what to do next. In the cocoa market, we seem to have two countries coming together now, the Ivory Coast and Ghana, where they're trying to put together through their cocoa board a floor in cocoa. Every time I've seen people such as OPEC try to put floors and other things in markets, it ends up costing the governments money because the marketplace is what determines price, not the producer. And when the marketplace it determines that price, if the government says, well, we'll make up to you the money to their own people, not a good situation. So cocoa is up here. It's feeling that pressure. It hit the upper Bollinger Band, closed under it at 25.04, and I think the market's hit an upside target, but I do realize the information that's going on. In the cotton market, we're still seeing good production out of it according to today's report. Nothing new bearish or bullish as I saw it. Lower highs, lower lows. This market's trying to push this Bollinger Band out. Notice how thin it got here. It was going pretty much sideways, and all of a sudden it lost that composure, and the market's now trying to push itself to the downside. Resistance is still the 18-day average, and this market is oversold. In the cattle market, cattle didn't know at first what to do with the grain price because as corn prices went up, the cattle market went for just about the day's lows. If you go to the report, it came out at 11 and you do your time and sales, you'll see the meats all came under pressure. By the end of the day, it came back up. How to trust that, I don't know because feed prices are going to go up. But we're at that seasonal time of the year where cattle generally starts picking up in price because you can move cattle. Talking the live cattle, you can put them if you want into the pasture and you feed a little less grain. Feeder cattle's a little different because they're in the lot trying to fatten up and that animal feed's going to cost more, and this market was down $1.70 from it. And you have the same situation in hogs. You don't let them out in the field. They're sitting there eating feed, and that feed price caused a little bit of pressure there. I talk about this and many other things in my reports, but one of my tools that I look at during the day is pivot points. Because if I see a market that isn't trending and just moving back and forth, this sometimes can give you an edge during the day if you're trying to do something or trying to accomplish even a day trade. It gives you an idea as to where support and resistance points are. A pivot point will come out in white on your chart. We teach you how to do all this because it's just a formula that's in most charting software packages, but I like it to color up a certain way. And you're looking at resistance 1, resistance 2, support 1, and there'd be a support 2. Now, FX traders can use more than 2 resistance and 2 support lines, but what I like about this is you can tie momentum into it as well. And this is how a typical chart with it looks. And what you're trying to do in many cases is time the market in terms of resistance points and momentum, trying to get in and out during a market. So it's not meant to be a position tool. I believe pivot points are for one purpose: in and out trading, or points of entry where you're trying to get a little bit better of an edge on your point of entry in a market. You're also looking at timing, maybe for an exit, because you'll see the markets get overbought and oversold, and you treat them in the traditional way as they do that. We've put together a 3-part series for you if you haven't seen it. They're all videos, real simple. So what you do is just call us. You can go to our website, sign up for it. We'll make sure you get it. We'll email it to you, and away you go. It's all links, so you're not going to get a big MP4 file. I'm Ira Epstein. You have a good day, and I'll talk to you tomorrow.